Lisa, I've been looking into Vinfast as a potential investment, and I'm not convinced it's a smart move. The company is ambitious, no doubt, but they're diving into a highly competitive market with massive players like Tesla, BYD, and traditional automakers who are all ramping up their EV divisions. I'm concerned they don't have the scale or experience to compete effectively on a global stage.
I see where you're coming from, Peter, but I think you're underestimating Vinfast's potential. Yes, the competition is fierce, but Vinfast has something unique going for them. They're the first major EV manufacturer out of Vietnam, and they've got strong backing from Vingroup, one of the largest conglomerates in the country. This gives them significant financial resources and a deep understanding of the local market, which could help them establish a solid foothold in Southeast Asia before expanding globally.
Financial backing is one thing, but this isn't just about money. It's about technology, manufacturing capacity, and brand recognition, all areas where Vinfast is still lagging. Their vehicles have received mixed reviews so far, particularly in terms of quality and range, which are crucial factors for EV buyers. Without a product that can truly compete, especially in Western markets, I don't see how they're going to capture significant market share.
Lisa, I'll admit the quality concerns are something to keep an eye on, but they're also a young company. Remember how Tesla struggled in its early days with quality issues? Look where they are now. Vinfast is learning quickly, and they're investing heavily in R&D to improve their technology. Plus, they've already started exporting to the US and Europe, which shows they're serious about becoming a global player. It's not just about what they are now, but where they could be in a few years.
That's assuming they can scale without burning through cash too quickly. The EV market is capital intensive, and they're going to need a steady flow of funds to keep up with their ambitious plans. If they can't generate enough revenue quickly, they'll have to rely on external funding, which could dilute shareholder value. Their aggressive expansion might be more of a liability than an asset if they can't sustain it.
Expansion is risky, yes, but it's also where the growth potential lies. If we wait for them to be more established, we'll miss out on the opportunity to get in early. Their international strategy is bold, but it's also necessary. The global EV market is growing rapidly, and if Vinfast can carve out a niche, especially in emerging markets like Southeast Asia and potentially in Africa, they could secure long-term growth. Their recent partnership with major battery suppliers like KTL also suggests they're thinking strategically about the future.
I'm not convinced their strategy is as sound as you think. Let's talk about the market they're entering. Western markets, particularly the US, are tough nuts to crack. Consumers there are brand loyal and skeptical of new entrants, especially from countries without a history in automotive manufacturing. Vinfast doesn't have the brand equity to compete with established players, and the idea that they can simply waltz into the US or European markets and start selling EVs in significant numbers seems overly optimistic to me.
That's true to some extent, but they've also been smart about how they're entering these markets. They're focusing on affordability and value, which could attract budget-conscious consumers who want an EV but can't afford a Tesla or a BMW. Plus, their strategy of offering battery leasing could appeal to customers worried about battery degradation, which is one of the biggest concerns for EV buyers. They're not trying to be a luxury brand, they're aiming to be the best value proposition, and that could resonate with a lot of buyers.
The affordability angle could work, but it's also a double-edged sword. To offer lower prices, they need to keep costs down, and that usually means sacrificing quality or margins. If their vehicles don't meet customer expectations, especially in terms of durability and performance, they could see high returns and low customer satisfaction. That kind of negative feedback could kill their brand before it even gets off the ground internationally.
You're right about the potential for negative feedback, but Vinfast seems to be aware of this risk. They're offering an impressive warranty package, including a 10-year warranty on their vehicles, which is unheard of in the industry. This shows they're confident in their product and are willing to back it up. It also provides peace of mind to customers who might be on the fence. It's a smart move to build trust and brand loyalty, especially as a newcomer.
Peter, warranties are great, but they're only as good as the company's ability to honor them. If Vinfast runs into financial trouble, those warranties could become liabilities. Plus, offering such a long warranty could indicate that they're worried about the durability of their vehicles. It could be seen as a desperate move to gain market share rather than a confident one.
Or it could be seen as a strategic move to disrupt the market. By offering something no one else does, they're differentiating themselves. It's a gamble, sure, but it's one that could pay off if they manage to deliver on their promises. And let's not forget the potential of the Vietnamese market itself. Vietnam's economy is growing rapidly, and with the government's support for green energy and EV adoption, Vinfast could dominate the domestic market, providing a strong revenue base while they expand abroad.
Dominating the domestic market might not be enough to justify the investment risk. The Vietnamese market, while growing, is still relatively small compared to the US, Europe, or China. They need to succeed internationally to achieve the kind of growth that would make this investment worthwhile. And with the geopolitical risks and potential trade barriers, especially with Western countries becoming more cautious about foreign automotive brands, their path to international success is far from guaranteed.
Those geopolitical risks are real, but they also apply to any automaker trying to operate internationally. Vinfast is no more vulnerable than any other company in that respect. And they're making moves to mitigate those risks, such as planning to build factories in key regions like the US and Europe. Localizing production could help them avoid some of the trade issues and gain favor with local governments.
Building factories abroad is another massive capital outlay, though. If those factories don't perform as expected, it could be a huge financial drain. And given the complexity of setting up manufacturing in foreign countries, there are countless ways it could go wrong. Delays, cost overruns, regulatory challenges. It's a risky strategy that could backfire if they're not careful.
True, but Vinfast has been ambitious from the start. And so far, they've managed to deliver on their promises. They've gone from concept to production in a remarkably short time, and they've already started delivering vehicles to customers in multiple markets. Their speed and agility could be a significant competitive advantage. In a rapidly evolving industry like EVs, being able to move quickly and adapt is crucial. If they can maintain that momentum, they could surprise us all.
Speed and agility are important, but they don't replace experience and brand reputation, especially in an industry as challenging as automotive manufacturing. Vinfast is still an unproven entity on the global stage. Investing in them now is a bet on their potential rather than a sure thing. And given the stakes, I'm not sure the risk is worth it.
Every investment is a bet on potential to some extent, especially in emerging industries like electric vehicles. The key is to assess whether the potential rewards justify the risks. I believe Vinfast has the potential to become a significant player in the EV market, particularly in Southeast Asia and other emerging markets. If they can successfully expand internationally, the returns could be substantial. It's a calculated risk, but one that could pay off if we get in early.
I see your point, Lisa, but I'm still cautious. The EV market is too unpredictable, and Vinfast has too many hurdles to overcome. It's not a clear enough opportunity for me to recommend an investment at this stage. I think we need to see more concrete evidence of their ability to compete globally before we commit our capital.
Fair enough, Peter. We can agree to disagree on this one, but I think we should keep an eye on Vinfast and revisit this discussion as they continue to develop. They might just prove you wrong.
We'll see, Lisa. I hope for our sake they do. But until then, I'm going to remain skeptical.